Okay. Hey BL, happy Monday. Good morning, Solid Snake. How you doing? I'm well. Hey Diana, good morning. Hope you're all well. Hope you guys survived the um, Jackson Hole Symposium. You know how you went? Any interesting trades that you got into or got out of? Hey Serene, how you doing? Hey Brian, I'm doing well. How are you? Good morning, Jordan. Hey Lee, weekend was great. Getting over a couple of things, but for bugs, but all back and good to go. Hey Ben, good to see you. How you doing? 2 more minutes and we shall get started. Just replying to a couple of members. Yep. I just found out. How are you doing? Good morning. So again, before we get started, the link is there for those of you not in the Discord channel already. There were some questions in the Discord channel about how to join the session, so it's here. Catch you all here. Thanks, Jen B. Had a number of good. We didn't have a session on Friday, but from our Thursday setup, we had a number of good, very good trades on the euro dollar. I did the euro dollar and the Aussie dollar. I think there was a pound dollar as well, but I didn't catch up to that. Hey Spiros, how you doing? Hey Robbie, good to see you. So if you guys did get into any of those trade setups that we were talking about, do let me know. SGD JPY hit 108. Okay, that's not something I trade, but good to know that you're watching that. SGD JPY. It's reversing slightly right now from memory on the USD JPY. So wait and see what happens on the SGD JPY. Let me know. Keep me updated on the SGD JPY Discord channel. Alrighty, so let's get started. Again, Monday. Good Monday. Good brand new week to all of you. It is coming towards the end of the week, end of the month as well. So do watch out for some crazy price movements possibly as we head towards September. If you are new to the session, do drop a message, say hi, let us know that you're here, let us know where you're joining us from. Love to find out. And if you can help me out massively, do click on that like and subscribe button so that we get more people onto this session. Whether you're on TradingView, on YouTube, on trading.live, wherever you are, click that like and subscribe button. Somehow the algorithm gets more people onto the session. All right. This daily market analysis is where I share with you my thoughts, views, and ideas of what I'm looking at in terms of the FX markets, some possible trade setups. I'll do a quick review of the fundamentals, look at the technicals, and if you do have any questions at any point in time, please feel free to put it into the chat. Let me know. I'll be happy to look at, explain further or look at any currency pairs or instruments that you have some questions on. So put it into the chat. And I see a lot of new names. Hi Sarah, how are you doing? Hey AYJ. Hey Rajat. So I see a lot of new names here. Hey Lainey. If you haven't already, the link is there. Do join the Discord channel because that's where we can take our discussions beyond this 1 hour session on the daily market analysis. Through the day, as we are sharing any interesting thing comes around, we'll be sharing with you my thoughts and views in the Discord channel. Okay, so with that quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material. Please do your own due diligence because the contents of this webinar is not intended to be a recommendation to trade a financial product, and your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. With that, let's keep going. Diana read an article that says China government debt. What's my thoughts for the market perspective? That's a big question mark. That's a big unknown. Well, not unknown. That's a big uncertainty there because we are seeing a lot of worries over big developers in China facing bankruptcy. There is a debt default, possible debt default as well. So a lot of unknowns and uncertainty there. At this point, I don't think it's going to impact the market. We haven't seen that impact translate onto the markets too much. But I think that this is a news that is developing as it goes, developing news item. So that's something that we'll pay attention to, but I don't think it's something that we're seeing a immediate impact right now. All right, Diana? Hey, Kegusi, how are you doing? So, looking at the news again, this was on Friday. We did have some data being released, but all that was a little bit overshadowed by Fed Chair Powell speaking. And what Fed Chair Powell said was they were prepared, FOMC was prepared to raise rates further if appropriate. No big surprise here in terms of what he said, in terms of the lines he said, right? It's could raise rates if appropriate. He's been saying that for the last year even, I think. So it's not a surprise there. What we saw with that was at 10 o'clock, as he was saying that the dollar index went from 104, just slightly above 104, went down a little bit, but shot up to 104, almost 104.45. The next hour started retracing back down. Right now, testing that 104 level. The question is it going to break this resistance turned support level? Okay, so I'll change all these resistance to support because it's been broken. Now the question is it going to break below 104? With that said, with what Powell said that they prepared to raise rates, the line or the decision has been pushed a little bit, right? What I mean by that is you see here the likelihood for a further rate hike. Probability of a no change in September is at 80%. Markets are pricing in that we're not going to see a rate decision or a rate hike from the FOMC in the September 20th meeting, right? A small chance that we'll see a 25 basis point rate hike, but generally markets are anticipating that we'll hold at the current rates. But on the 1st of November, what they're anticipating is that we could be looking at a 50-50 chance, almost 50-50, 43 to 56 43.1 to a 56.9 chance of a rate hike, whether it's a 25 basis point or a 50 basis point. Very low chance of a 50 basis points at 9.1%, but it looks quite even between holding and a 25 basis point rate hike. So that's the question. Looks like September meeting not going to see a rate hike, but in November we're possibly looking at a equal chance, almost equal chance of a rate hike here. It all comes down to what Powell was saying. You know, they're going to proceed carefully, and it's going to be dependent on a lot of data. More importantly, the employment data and the upcoming inflation data. Not so much in September, but more towards the November meeting. Okay, so that was what was said during the Fed chair speech on Friday night, 10 p.m. GMT plus 8. Make sense so far? Any questions on that? Do let me know. Give you a couple of seconds to type that while I say hi to Angel Case and Goju. How are you guys doing? And hey Desiree, how are you doing? Okay, all good on Fed Chair Powell and the Jackson Hole Symposium. Apart from that, right, Jackson Hole Symposium, President Lagarde spoke on Saturday morning or Sunday morning at 3, or Saturday morning at 3 a.m. GMT plus 8. ECB is data dependent, decides meeting by meeting, right? So it's not fixed, but they're pretty confident that by end 2023, inflation numbers will look different because the ECB are set to set rates as high as necessary for inflation fight. Okay, so no big surprises here coming from the Jackson Hole Symposium. All good so far? Okay, good stuff, good stuff. Then with that, one more thing to highlight was that as the dollar index shot up, you can see this was the news. Leading up to that, we actually saw the US yen continue on its climb to the upside. It went as high as 146.62 or 146.63. Retraced briefly, now pushing back up again. So it's testing that resistance of 146.50. Right? Why is it still pushing up despite what the dollar is doing? It's been retracing slightly before that push up. Was that BOJ Governor Ueda still sees that underlying inflation is still a bit below that 2% target level. Low inflation sticking to the current framework, which means that they're likely to stick to that ultra easy policy, and that's why we see the yen continue to weaken against the dollar. Okay, so that's why we're seeing the yen push up with, again, no big comments about about interventions to come from the BOJ. All right. Jordan was saying a large push down on the pound dollar. It is rejecting that support turned resistance level. So that's something to look at. I like that round number. So we'll watch that. We'll come back to that shortly. With all that said, that was all that happened previously. Now looking forward, it is Monday, so let's do a quick preview of what's coming up this week. Not much, right? We do have the bank holiday for the UK. It is the summer bank holiday, so I think that's one of the reasons why we see the pound dollar tracking lower. No one defending it. No one defending the pound dollar. That's why we see it dropping. With that, we do have bunch of news, not big ones. We do have the CPI year on year for the Aussie on Wednesday. I'll tell you more about that tomorrow during the session. CPI for the Eurozone, GDP for the US. Check some lights flickering. Just want to make sure that everything's okay for now. Camera hung. Oh man. Can you hear me? Camera just decided to go put. Hello, hello. Okay. So it seems like you guys can hear me, but camera is not working. Give me a moment. Check. Okay, works on. Okay, can still see the chart, the screen moving. My all right. It look like you just have to deal without my face. It works on Discord, so if you want to see my face, I'm on Discord there, but we'll be on YouTube with voice and no camera. Okay, we'll still continue on. So what we're looking at here is the Aussie CPI for Wednesday. Then, as we head towards the end of the week and into the new month, we do have on Thursday core price index for the US to be released. Then on to Friday, non-farm payroll employment change numbers be released for the US on Friday. So we took a lot of news for this week. We'll get you through that. But for today, I think that what we're going to see, we're already seeing that the pound dollar track lower, but you'll see that there's no major news events for today. So we could be looking at a continuation. We saw that retrace on the dollar already. We might be looking at continuation. It might fail to break that 104 level and continue to the upside. Okay. All right. So it works there. Hey, Goosey can see me on TradingView. That's good. All right. So now looking at the charts here, looking at the charts, dollar index on the H1 time frame. Today is the 28th of August. Right, it shot up, so it did not retrace. We didn't see the inverted head and shoulder, so I'll take that away. And it bounced off. So it bounced off the trend line, continued to the upside, tested 104.45 before trading back down. So the question now is whether it's going to break below this support level to turn down. Looking at this, I am checking, and you can see that it just came to that 38.2 level. Right, it just came right to that 38.2 level. It's testing that point. Anticipation is that if we do see further uncertainty, right, the dollar, we can see here the headline, dollar wobbles as investors ponder higher for longer rate path. It looks like it's going to consolidate here. I would like to see it drop. I would like to see it break that support and head down towards that 103.60 level. However, it looks like it might find the support here and bounce. It looks like it might bounce off the support here back towards that resistance level, which we have back there. But if I take that away just to consider the most recent levels, then it would at 104, about 104.40. Okay, so I think that if it fails to break below this point with that 38.2 pip retracement level and the 104 level providing some support, we might see it bounce back up. So dollar index that we is the chart moving for you guys? Okay. Yeah, there's no camera, but so just make that. Camera just started flickering and I don't know what's happening. Okay, let's still go on. Dollar index bounce from 104 towards 104.40. Okay, so last week when we were talking about this, we were looking for it to retest a trend line. It did not break towards 103. In fact, it went to retest 104 and a bit higher. So now we're looking for that move to continue. We're looking for it to bounce back up. With that said about the dollar, then looking at the key dollar, see that it's continued to, or shot right down at the start of this hour or within this hour. Take these away because it's not trigger, and you see that it broke down from that trend line, that 50% level, went straight down. Right now what I'm looking at here is if it breaks, so anticipating that dollar strength. So if this breaks down from 0.59, and we could see it come down towards 5850. 5850, which makes sense. So what I'll be looking for here is a selling opportunity at about 5895. 5895 tight, no more than 20 pips stop loss. Take profit, we go down to 40 pips, 1:2 to the downside. Basically what I'm looking for here is for it to push down and break that support level. Okay, and this has broken, so we take that away. If I drag this right down, you see that it's still pushing to the downside. That away. And just as a point of explanation, you can also see that price actually bounced off that 38.2 retracement level to trade lower. Okay, so Kiwi dollar 5895, 20 pip stop, 40 pip take. We're looking for sell 0.55, stop loss 20, take profit 42, downside. All right, that all good. Now onto the Aussie dollar. Right, Aussie dollar did very well. We were looking for it on Thursday. We're looking for it to break down, broke back through this support level, now turned resistance, and had that good 55 pip to the downside. So if you guys did the Aussie dollar, do let me know. Good 55 pip trade to the downside for that. Right now, trading back down, I would say that give it a little bit of, it needs a little bit more time. Needs to break past this support level first, right? Before we can anticipate further downside. Not a lot of, I wouldn't trade it down because there's only a good 20 pips towards that support. So what I would do is wait for it to break that support level before we can see further downside on the Aussie. However, think that this would be a short-term move because remember on Wednesday we do have the Aussie CPI looking like it could go from 5.4 to a 5.2. If we do see a slowdown in inflation growth, that's going to support the Aussie a little bit in terms of the RBA not having to talk about further rate hikes. So that's going to be a bit helpful to the Aussie. I would say we need to see a reaction along this support level of 6390 or 6380. Lines here on the 4 times. That makes, but I could update this that away. This fib levels don't work anymore. We can take it away. 4 time frame, you can see that we are seeing big downward push on the Aussie dollar. Right. So back to the H1 time frame, what I would be looking for here is if price were to break below this point, 6378. Break past this point, we could see further downside towards 6276. Good, almost a good 100 pip move to the downside. So if you were looking to sell down, if it breaks below that support, you're looking to sell down 6365. Stop loss 25 pips. Take profit 80 pips to the downside. Dollar strength pushing this down, that makes sense. Okay, that 365 25 80. So sell 638 5 25 5. Stop loss 25. Take profit 80. There we go. Okay, so Aussie dollar, Kiwi dollar looking to sell down, especially if we see that dollar strength push back up. Now, this you would have to wait a little bit more because it does need to break below that support level first. All right. Hey Diggs, by the way, how are you doing? What's up? Now back to the US yen. Broke right straight through that 1.8 level, so we did not see that reversal. We did not see that possible intervention from the Bank of Japan right now, testing that 146.50 level. I would say that anticipating again that dollar strength, looking for that upward push, right? Looking for it to break that resistance to push higher. It is coming to a very dangerous level, but follow the trend. It looks like it's going to continue to the upside, and did that. You could see that it's finding that channel, right? Bounced off that channel, top level there, bottom, top. We could track it down there. So now if it breaks up, we could see it go further to the upside. I don't think we'll see 148.30 in a hurry. So if it breaks up, then to H4 time D. Somewhere in the middle here, this point. Oh, so about there. Right, I put that as a dotted line. So about 147.30. Back to the current. I'll be looking for this. If it does break up above that resistance level, then you could be looking at 146.65. Stop loss 25 pips. Take profit 55 pips to the upside. And you can see that that coincides quite nicely with the top of the channel as well. Okay, so I would be looking for this on the USD and on the H1 time frame. Hey, Jamil, how you doing? So 146.5, 25 to 5. Don't think, I mean, there hasn't been any, since recent times, there hasn't been that conversation or the comments about intervention. So I think that we can put that on a little bit on the back burner, let the US yen go higher, and then I think it would reignite further conversations about intervention. So we're looking to buy at 146.65, stop loss 25, take profit 65. That's 65. Yep. Hey, yes, I will get to the euro dollar. Just hang on there. We're doing the US yen right now. Next up, pound dollar, then on the euro dollar. So I'm with that. Okay. Then onto the pound dollar. Further downside, right? We did well on the pound dollar, good 60 something pip. It broke a lot further than we expected. So let me know if you did. It broke out that consolidation to the downside. So we were preparing for that straddle and it worked downwards towards the equal low. We had our take profit. Broke past the support level before bouncing back up again. Get resistance. Go. Take those away because that's done. Good 60 pips. Let me know if you got onto the pound dollar for 60. Now that it's tracking at this point, I would definitely like to see more downside. I would anticipate more downside on the pound dollar. I don't see why it would push back up, right? I'm looking at how the dollar index is performing. Looking at this, I mean, if it does break down, the question, how far or when to get in trade, 1.2576 or 75. Stop loss will be quite wide at about 40. Take profit will be about 80 pips. I think you can have that option here on the pound dollar, right? Where could also be anticipating if the dollar index does not bounce. If it does not bounce back up and actually breaks lower, then we could be preparing for some rebound. Okay, what I would be considering, 38.2 is right there as well. So while this would be the trend following scenario, all right, something to consider is also whether we could see a dollar weakness and then a rebound on the pound dollar. So at about 1.2620, take profit 80, could even be a 90 pip to the upside. Stop loss could be quite tight at 25. This would be interesting if it does, the dollar weakness does come around. You see that push back up as a retracement. 38.2 would have been broken as well. Okay, so I'll put that as a possible counter trend scenario. Alrighty. 1.2620, 25 to 90. Put that as a possible counter trend. 1.2620, stop loss 25, take profit 90. That's counter trend. DXY weakness. right? So in either scenarios, we do have opportunities for a trade setup to be triggered. And also because you see how the dollar index is sitting right there, it's not confirmed yet. We could still see the dollar index break downside. Then to euro dollar, we have good double. So we had a very good trade here, right? The inverted head and shoulder did not trigger because it did not break above that neckline. So we'll take that away. But we did see the euro dollar trade down, hit that 50 pip take profit. So that was a very nice trade there on the euro dollar. What's interesting now is that we are seeing a very tight double bottom here on the euro dollar pushing, right, leading that push back up. And as you know, the relationship between the euro dollar and the dollar index, like Font is saying, is that as the euro dollar pushes up, that's leading to the dollar index pausing on that rebound, possibly pushing back down. Okay, so what I'll be looking at here on the euro dollar at this resistance level of 1.0837 or 1.0840, we can put that there, is what happens at this point. What happens at this point? What I'm looking for here, moment, checking some levels. Right, so even what I would be looking for, I'll give it a bit more time, is not just at the resistance level of 1.0840. I would say that in that space, right, it needs to break above that horizontal resistance and that downward trend line before we could see push back up on the euro dollar. Checking the levels here, you'll see that it also would coincide with that 50% fib retracement level as well, right? So we have a couple of levels here, horizontal level from that price, that swing level there. We have that 50% retracement level. We have the trend line, the bearish trend line. Needs to break all that before we see it push up, possibly towards 109 and 109.20. Think that while that's a setup, looks a little bit unlikely. I think that it's going to get up to this point before we make a decision. So you do have two opportunities here. Could look for it to reject 108.30, 108.30. Stop loss 20 pips. Take profit 50 pips to the downside. Or if it breaks above that trend line, then you do have 108, a bit of space, 108.60. Stop loss 25. Take profit a good 50 to 60 pips to the upside. Right? So between these two, let me ask you the question. Which would you prefer? Would you be looking more for a trend following? Right? Or would you be looking more at a big correction to the upside? Put it into the chat, let me know. Trend following or correction to the upside? Right, why I ask this question as well is just so that we kind of get a market sentiment for a very small sample size, but market sentiment of where you guys are thinking that the prices could head towards. Good, good. So Solid Snakes UK said, personally trend following, but it's what I've been used to. Robbie says trend following for euro dollar, but I try to be flexible. You know, recently over the last week actually, I've been having a bit of been coaching a number of clients one to one, and I think, and also talking to you guys in the Discord channel, um, seeing your trades a little bit. I'm coming to the point where one of the key features is flexibility. I'll start coaching you a bit more on flexibility. I think that's the biggest point of difference in how a lot of people can trade. Um, Euro dollar looking to go long, correction to the upside for me from Angel Case, trend following. All right, so we look like we're on 50-50 in terms of trend following, and on correction, I do think that we might see this push back up to on the correction front. But it comes down to what's going to happen on the dollar. Are we going to see any big surprises from the FOMC or on the dollar index? So with that said, both opportunities are there. Needs to see what happens at 108.40, but I'm more tempted. I would like to see this happen on the euro dollar. So 108.60, 25 pip to 60 pip to the upside. So we'd be looking to buy 1.0860. Stop loss 25, take profit, keep it upside. But you do know that, although we're looking at the pound dollar and the euro dollar to buy, although we've listed it to buy, we are also considering the possibility that you have both upside and downside potential on the pound dollar and the euro dollar. In fact, pound dollar looks like we might see it break lower already. Okay. Question there from Zawa Wazi is on the pound yen, right? So we saw pound US yen possibly pushing to the upside, pound dollar trading lower. Looking at the pound yen, last time we spoke, double top formation, breaking down. That was a good trade, broke below on this 185.50 level, straight back down. Now again, another double top formation, and the pound yen does tend to do that. We do see a repeat of patterns over and over. What I would be looking for on the pound yen, currently at 184.30, needs to break below 184 to see further downside. You could be looking at 183.85. Stop loss tight, no more than 30 pips. Take profit to that 70 pips to the downside there on the pound yen. Hey Frederick, how you doing? Good morning. All right, so hope I answered your question there. Visa on the pound yen. Then on to the euro right there. Pound dollar looks like it's, I think now it looks like it's found a good resistance. So actually this one, 1.2575, 40 pip stop loss, 80 pip take. That's changed. Right, so I would actually prefer this sell 1.255, 75, 40 pip to stop loss 40, take profit. I prefer that one. Okay, euro dollar, I wouldn't be ready. I think it's right in the middle. If it does come down, so we will miss that trade, but we could look for a reaction along that support. Let's see what happens on the euro. But the pound dollar is setting up a lot earlier, and with 15 minutes to go, this could be a trade that could be triggered at the turn of the hour. something to watch out for there. All right, on to the US Swiss franc. Hey, what is this? Again, guys, help me out. Do click on that like and subscribe button, that little rocket ship button as well if you can on TradingView. Get more people onto the session. US Swiss franc didn't retrace we expected because of that dollar strength right now. But shot up as high as 0.8880, came back down, now pushing back up. With this, looking at, you see that it bounced off that 50% level, pushing back up. This is support, zoom right out, level there. Beyond that, we have our next resistance at 8912. Could even rise that to 89, almost 8920. Checking this, do have a level here. Put that as a dotted line. So coming back to the current, I would say that if this pushes up, it's not ready yet. If this pushes up, that would be dollar strength scenario. You could be looking for 8855. Take profit 60 pips. Stop loss very tight, no more than 20 pips for this to push back up. Breaking above the previous high where we saw that. If it forms a nice pin bar as well at that 50% level, we could push up. So 8855, 20 pip stop loss, pip take profit. Buy 0.8855, stop loss 20, take profit 6 to the upside for the US Swiss franc. Then on to the US CAD, right? Last we spoke about it, climbed to 1.3580, a look for a reaction. It went up to 1.3580, it broke 1.3580, went up to as high as 1.3640. It was a good reaction as it broke up because of that dollar strength. Came back, tested this resistance to support level, now looking to push up again. That upward push, drag this right up. You see that while that trend line is still valid, a little bit further away. Okay, and then if we did this, is that it possibly came down, tested a support level 38.2, bouncing back up. Naturally, I would say trend following, looking for further upside. I'll be a little bit careful on the US CAD, overextended, and also because if you look at this, zooming right out at this area, we do see big reactions on the US CAD. Right, it could come towards 1.3653 or as high as 6 for back down again. Okay, so I'm just a bit worried this extension of these levels. So back to the H1 time frame, what you would be looking out for here, take that away, that's not really level. Closes above 1.36. Is that 1.36 now? Give it a bit of space, 1.3610. Take profit up 50 pips. Stop loss 25 pips, 30 pips. Reasonable. There you have it. 30 to 50. Not a great risk to reward, but that's a setup to the upside there for the US CAD. All right, makes sense. Could you go a little bit earlier? It's not going to make a big difference in terms of the pips. So I would say to be safer, 1.3610, stop loss 30, take profit 50. So 1.3610, stop loss 30, take profit 40. Again, you see that because of the risk to reward 58, because of the risk to reward, this would not rank very high. I think that there are a lot of other opportunities across the other currency pairs, especially on the pound dollar. Right after this session, I tell you my focus will be on the pound dollar if it does break lower. Okay, Wyckoff on the euro, I will take your word for it. I don't do Wyckoff. I'll take your word on the Wyckoff on the euro. Okay, then on to the gold. Right, gold, we were looking for it to retrace to 1915. If support holds, could bounce to 1930. This was on Thursday when we spoke about this. The retrace to 1915 did not have the big shoot up because of that dollar strength, right? The dollar strength led to gold pushing lower. Right now, anticipating that dollar strength to come back into play, we would be looking for this to break to the downside. So this one we can take away. Now, if it breaks below this support level, then so we'll say break below 1940. Take that one away. Update it to this point. 12. If it breaks below 1912, we could see next near-term level of 1904. Break 1912, could trade down to 1904. Alrighty, there we go. Look at the dollar forming up. Still a little bit early, but it's looking like it's trying to push back to the upside. The question there is, do I enter the market with a stop orders or limit orders? I actually do my entries on a market execution or instant, what's the word? Instant execution or market. I forgot the word right now off the top of my head. I enter it straight away. I don't put in the buy or sell orders. Just because I like to see how price move. I want to see it close above a level before I do get into a trade, not just because it got to a particular price point. It just needs to close at or beyond that price point before I get into a trade. Okay, with that said, again, do join the Discord channel if you haven't already. I am annoyed that the camera, so a couple of weeks ago, last week or 2 weeks ago, the mic wasn't working. Today the camera isn't working. So looks like I need a whole IT overhaul. But with that said, do make sure you join the Discord channel if you haven't already. Help me out, click that like and subscribe button on YouTube or TradingView, and trade well, trade safe. I will see you all on Discord, and if not, see you tomorrow for the daily market analysis. Thank you all so much. Take care now. Bye bye.